point out a couple of stocks in pre-opening. Nazara Tech is actually taking a bit of a beating this morning. Remember, their step-down subsidiaries, Kidopia and MediaWorks, have cash balances at Silicon Valley Bank to the tune of almost 64 crores. So the stock is getting hit. The company has said, regardless of the outcome of the SVB issue, both subsidiaries continue to be well capitalized and are generating positive cash flows. But there's definitely some sentiment negative on that stock. And a couple of other names, Mahindra CIE as well. Sources say that M&M will be selling their stake, about a little under 5% stake in Mahindra CIE. So that stock is down about 6%. Prakash Diwan joins in now for a fundamental check on the markets. Prakash, good morning. On Nazara Tech, because it's been in the news, of course, this is a sentiment knee-jerk reaction on the stock. But if you were an investor holding on to Nazara Tech, what would your advice be?
Good morning, Sonia. So you're absolutely right. I don't think 64 crores of a deposit, and that too, now that we hear about the backstop, is at risk in any case. And remember, it's not the entire 64 crores that will have an impact on the Nazara balance sheet. You actually have 50% in Kidopia and probably about 33% in the other one. So it's fairly dilutive. Probably the market is reacting to some sort of a sentimental setback. But for investors who are already holding, I think it's a good time to add up. For those who like the business, they could also kind of get in. But valuations are fairly demanding in this case. So I would recommend a fresh buy. But as I said, only the caveat is only if you like the business. This is a good level to buy.
By the way, the rest of the market, banks, the indication is that banks could start off on a slightly weak note, which has been a little bizarre. Banks were battered and bruised quite badly on Friday as well, though there's absolutely no direct linkage with what's happening in the US and, of course, banks over here. IndusInd Bank in specific is an interesting one. Now, the stock is down almost 3% in pre-open. Mr. Katpalia has an extension, but it's not a 3-year extension, it's a 2-year extension. And some of the brokerages, I remember Abhishek talking about JP Morgan in particular, they have been sounding extremely cautious on the back of this development. In fact, Abhishek's back with us. Abhishek, fill us in. So the pre-open is showing a lot of that caution that you were alluding to at the start of the show.
First to begin with the news, Surabhi. So RBI has granted a 2-year extension to MD and CEO of IndusInd Bank, that is Mr. Sumant Katpalia. The board had sought for a 3-year extension, however. So his term was due to end on 23rd March 2023, which is now extended by 2 years. Brokerages say that the move from RBI is a negative surprise. Valuations are on the cheaper side for the bank, given the fact that price to book value multiple is around 1.2, 1.4 on a 1-year forward basis. They also say that, one can use this correction to add the bank in their portfolio, or they can invest in. So we have JP Morgan, who have actually downgraded the stock to neutral from overweight with a massive target price cut to about 1,060 from 1,400 that they had earlier. Even Jefferies had cut the target price by 50 rupees to around 1,550 from 1,600 that they had earlier. However, other brokerages do remain bullish on the stock. Not to allude with the fact that, this year or 2023 may see a lot of MD CEO terms actually ending. So the list that I have prepared is of City Union Bank, AU Small Finance Bank and Karnataka Bank, who will have their MDs or CEOs actually retiring, or, the term ending in April 2023. ICICI Bank, SBI and SDFC Bank, their MD or CEO will have the term ending in October 2023, and Kotak Bank, that term of Uday Kotak is coming to an end in December 2023. So we have the list compiled about 6 to 8 banks who will have their MDs retiring or ending the term this year. Back to you.
Abhishek, that's a very interesting events calendar that you've created for us. I'm going to take a printout and put it on my desk for sure. That obviously becomes a big watch point for a lot of these stocks. But Prakash, specifically on IndusInd, come in on this. There's a wide divergence. There's JP Morgan at one hand, close to 1,000 odd. There are a lot of other brokerages still calling for 1,500 plus. Do you see this as a negative, that the fact that Mr. Katpalia has got 2 years instead of 3?
So, Surabhi, probably, JP Morgan knows some plans of the bank between the second and the third year, and which probably they're disappointed with the shorter tenure. I don't have any input on that. And, at times what happens is when brokerages have targets which start looking a bit more ambitious, they always use some trigger, some excuse to bring those things down, and that's like, they talked about an ROA expectation of more than 2%. I mean, the best of banks probably don't match that. So, it's definitely setting the bar higher and then probably reducing your price objective just to make it more contemporarily conducive to the environment that you have. So I don't think there's anything negative in that. IndusInd continues to be a promising bank, the mid-sized private sector banks, which has the potential to scale up, especially now that the promoters also have very clearly indicated they're putting their weight behind the business. So yeah, I mean, it could be a good opportunity for some of the people to look at if they really like that business, and they don't have much exposure to private sector banks.
Okay, by the way, the pre-opening rates have settled absolutely flat, but the stock which is on fire this morning is Tech Mahindra, up 6%. The street was awaiting this, right? A succession plan post Mr. C.P. Gurnani leaving. And now we know that Mohit Joshi will join in as MD and CEO for 5 years. Reema's with us. Reema, the street really likes this development.
Yes, absolutely, because one, it ends the speculation. The street has been speculating for the last 6 months who is going to take charge as the MD and CEO of Tech Mahindra after C.P. Gurnani steps down in December of this calendar year, 2023. So now finally that speculation, that uncertainty has come to an end, and it's Mohit Joshi. Now, Mohit Joshi himself has very strong pedigree. He comes with over 20 years of experience in Infosys, where he was the president of banking and financial services and the healthcare vertical. Both these two account for more than 36% of their overall revenues. Not just that, he was also had the executive responsibility for all the large deals across Infosys. So, it's a strong name and the street likes it. But he has his task cut out because Tech Mahindra has been an underperformer over the last many years now. So his immediate goal is going to be reverse the underperformance on the revenue and also catch up with peers in terms of margins, because Tech Mahindra's margins have been, lower compared to the rest of the peers. This news is also a bit of a setback for Infosys because in the last 6 months, they have lost 2 presidents. And president in the Infosys hierarchy of responsibilities is second to the CEO. They lost Ravi Kumar to Cognizant, and now they've lost Mohit Joshi to Infosys. So it's a win for Tech Mahindra. The street likes the appointment, but it's not going to be easy. He has to execute on the responsibilities ahead, but it's a bit of a setback for Infosys. Back to you.
Okay, thanks a lot for that. Prakash, your quick thoughts here on Tech Mahindra. The stock, as Reema was saying, has underperformed its peers over the last 1 year or so. Is the risk reward looking favorable now?
Absolutely. I mean, this has been one of my top picks on the within the IT pack, given the fact that whatever was going wrong on the telecom side, which has been their bread and butter business, could change dramatically with this new incumbency of a person who has got a very strong pedigree. So yes, and that's 1,1500 zones that it used to trade into. We've seen almost like a 40% sell-off from there. That could kind of be the catch-up play for Tech Mahindra, while the TCS and Infosys of Wipros of the world probably struggle a bit to just get their act together. So I think it's a fairly positive trigger. The street will like it and continue to hold it in good state. Yeah.
Okay, by the way, I just want to mention Yes Bank is down almost about 10%. So just keep that on your radar. The 3-year lock-in period for Yes Bank ends today. So, the lock-in for shareholders of Yes Bank. So that stock is really taking a big knock. Any thoughts here, Prakash, on how one should approach Yes Bank? I mean, it's obviously had its fair share of problems, but there's a big block deal as well. I think 2.5 crore shares are being traded in a large block deal in Yes Bank. Any thoughts on how to approach it?
You still don't say yes to this, Sonia, because it's still beleaguered. They've done a bit of course correction, but the core business needs to start kind of contributing. I mean, selling off some of the assets, getting an ARC spin-off, that's not going to help. And some of the larger banks which have backed it in times of crisis will, of course, want to kind of reset their priorities as well. So once that lock-in gets done, you'll probably see a lot of decision-making around it, which might not be good on the liquidity side. There could be a lot of free float that comes to the market, and absorption at this point in time, given the banking environment, is of course a little bit questionable. So it will see some pressure, but once it settles, you could review it at a very different juncture in a different way. Yeah.
This is going to be an interesting one, Prashant. I was looking at some of the numbers that Abhishek was talking about. I think about 30